Hello everyone, welcome to a brand new Forex market trading lesson on the US dollar index and currency correlation. This is the topic that we will be treating for today. And knowledge about the US dollar index and currency correlation will take you very far in your career as a Forex trader. It is a very helpful thing to know. Our pointers for today will be taking a look at the composition of the US dollar index, how it is symbolized on various platforms, currency correlation, which is our main topic for today, and the different indices that you can use to track the currency correlation aside the dollar index. Many people actually don't know that there are various indices aside the dollar index. The composition will also take us through the currencies that make up the dollar index. So with the composition of the US dollar index, we have the euro, the Japanese yen, the Great British pound, Canadian dollar, Switzerland franc, and the Swedish krona. These are the major currencies that make up the US dollar index. However, the majors we have on here are the euro, JPY, GBP, CAD, and CHF. We wouldn't be focusing on the Swedish krona since it is a country from an emerging economy. We'll only be focusing on these ones, that those are the major currencies. We can see from this slide that euro bears the highest percentage of the dollar index, which is actually 57.6% of the index. The JPY bears 13.6% on the index. The GBP bears 11.9%, and so on. CHF also bears the least amount of percentage on the dollar index, which is the 3.6%. So since the euro bears 57.6% on the index, it has the highest weight in the index and it has the highest correlation value when it comes to correlation with the dollar index. So how the US dollar index are symbolized on various trading platforms and charting platforms are listed below. Don't go to your broker or your platform looking for US dollar index. There is a high probability that you may never ever find it. These ones listed here are how the dollar index are symbolized on various platforms. We have the USDX, the DXY, the DXUSDIX, and the USD index. It is worthy to note that the USD index is what you find on many trading platforms. It is the commonest of the symbols when it comes to the symbolization of the US dollar index. So to our main topic for today, which is the currency correlation. Correlation is simply the relationship between two or more currency pairs. Correlation is either positive or negative. When it comes to currency correlation, there are no midways. When we learned about the composition of the US dollar, I noted that we will be focusing on the major currencies, but two major currencies, which are the Australian dollar and the New Zealand dollar, didn't appear on the list. They didn't appear on the list because the Australia and New Zealand are not very major trading partners of the United States. Only the major trading partners of the United States appear on the list of the dollar index. So when we talk about the US dollar index in relation to currency correlation, these are all the pairs that our focus will be on: the Euro USD, GBP USD, AD USD, NZD USD, USD JPY, USD CAD, and USD CHF. I skipped this one because it is a commodity. It's not an actual currency pair. XAU USD stands for gold. You may either find gold or XAU USD on your trading platform. When we are talking about currency correlation, I made mention that correlation is either positive or negative. So if we come across pairs that have USD as the quote currency, they are negatively correlated with the dollar index. And if we come across pairs that have USD as the base currency, they are positively correlated with the US dollar index. There's a legend here which says that The first listed currency of a currency pair is called the base currency, and the second currency is called the quote currency. So we have USD as the first pair in this currency pairing, which is the base currency, and we have it as the second pair in this currency pairing, which is the quote currency. A simplified view of currency correlation. Euro USD, GBP USD, AD USD, NZD USD, and gold are negatively correlated with the US dollar index. Negative correlation means that when these cluster of currency pairs are moving upwards or are in an uptrend, then there is a high probability that the US dollar index is also in a downward trend. Also, this cluster of currency pairs below, the USD JPY, the USD CAD, the USD CHF, are positively correlated with the US dollar index. That is, they move together. If this cluster of currency pairs are moving upwards, then there is a high probability that the dollar index is also moving upwards. The reverse or the opposite is also true for downtrends. With the composition of the dollar index, we saw how the euro bear a very high percentage of the US dollar index, and this chart provides evidence. The chart on top is the dollar index, and the chart below is the euro USD. This is just basically for comparison's sake. We have chart data from February of 2020 to February of 2021 on both the dollar index chart and the euro USD chart. We can see from that period the US dollar index has been in a smooth downtrend. Conversely, the euro USD pair has also been on a smooth uptrend. It's as if they mirror each other, and it's as if the correlation is almost at 100%, but there is nothing like a 100% correlation. This is actually proof that the euro bears a very high percentage when it comes to the composition of the US dollar index. With the other currencies that are included in the dollar index's composition, there is nothing like correlation which is negative and which is as high as this one. However, the US dollar index may also be highly positively correlated with the USD CHF chart. So correlation is actually not cast in stone. Correlation changes sometimes, and for the reason why correlation changes, we may never know as retail traders. But safe havens are a good reason why we may see that sometimes correlation may change. USD is a safe haven, JPY is a safe haven, gold is a safe haven, CHF is also a safe haven currency. Safe havens basically means that in times of uncertain economic conditions, investors or big investors run to these currencies to seek some sort of rescue. So when these currency pairs are acting as safe havens and the US dollar as a currency is as strong, then currency correlation may be distorted. That is, you may not see USD JPY trading together strongly with the dollar index, XAU USD trading strongly negatively with the dollar index, and the CHF also trading positively strongly with the dollar index as well. But just know that correlation changes from time to time, and most of the time we have no reasons to explain why correlation is not cast in stone. The dollar index, as I noted from the beginning of this video, is not the only index that is available on the trading platform or the Forex market. We have other currency indices. All the major currencies have indices as well. So you don't even need to pull up only a chart of the dollar index to see how it is related to other currencies. If you really want to see how the euro is correlated with other currencies, you can pull up the euro index, which is represented as the EXY, BXY for the pound index, AXY for the Australian dollar index, ZXY for the New Zealand dollar index, JXY for Japanese yen index, CXY for Switzerland franc index, and finally this one is actually SXY and CXY for the Canadian dollar index. Hey there, I really hope that you enjoyed this video. Never ever forget to factor the US dollar index and currency correlation into your trading. Never ever forget to factor it into your analysis with reference to the major currency pairs that are available on the Forex market. Don't forget to hit the like button. Also, if you haven't subscribed to my channel yet, don't forget to hit the subscribe button as well. Bulls make money, bears make money, but pigs get slaughtered.